Hello, chart watchers and Decision Point faithful. Welcome to this Monday, October 19th, 2020 episode of Decision Point. I am here with my father, Carl Swenlin, and it is our job to get you prepared for this week. It's been quite a trading day, so we'll have lots to talk about. How's everything going with you, Dad?
Good. As you know, I got a new microphone. People were complaining about how I sounded, so we have a new mic. And
Yeah, certainly anybody who wants to make comments, that would be great. So we know that it sounded good, but it does sound much better.
well, I'm afraid what we're going to hear is yeah, we can see how the mic is improved, but the real problem is Carl's voice.
I don't know about that, but we'll see. All right, so let's take a look at our agenda today. We, of course, will start with our market and indicator updates so you can see what we're looking at right now as far as the overall market. Carl's going to take over. At that point, he's going to talk about Black Monday, 1987, which, how many years has it been, Dad?
33 as of today.
Wow, 33. Okay. I do remember that. I was in college at the time, and I still remember when it happened. Of course, we didn't think too much of it in college because we were busy thinking about other things. But I do remember that. Wasn't the savings and loans, and there was a lot of going on at the time.
Yeah.
All right, we'll talk about that a little more later, but we'll be looking at the golden and silver cross indexes. Those are our exclusive indicators. We'll be talking about those. Carl's going to do a review of the IBM chart. I don't know exactly what he's going to be talking about on it, so I'm very curious myself. And then I will cover the diamond of the week. Depending on how much time we have, I might go into a sector review prior to going over the diamond of the week. So let's go ahead and get it started. All right, first of all, Decision Point Trading Room. I had it this morning at noon Eastern time. It is free. I do it every Mondays for 1 hour. It is a recurring registration, so just go in there. If you're on our free email list, you will get the registration link. I also post them to Twitter, so you can follow me on Twitter at _DecisionPoint. Or on LinkedIn at Erin Swenlin. I do try and post those links to that free trading room. And it was really a great one this morning. We had lots to talk about, lots of symbol requests and questions. So I invite you to come join us if you haven't already. As far as our Decision Point scoreboards go, everything's really quite green. If you recall, last Monday, we had a bunch of these new short-term buy signals come in. But since then, we haven't lost any, but we haven't gained any more. This particular one, sell signal on the Dow, that's the long-term monthly PMO. And it is still on a sell signal back from December 31st of 2018. So we had some deep corrections going on with the Dow over that period of time. It's taken some time. We're not quite there yet, but we'll be looking to see, watch for that signal change. But at this point, I don't think it's coming that soon. The sector scoreboard, as you can see, mostly green. Energy still is the laggard as far as all of these sectors go. The intermediate term trend model, this is basically where the 20-day EMA is in relation to the 50-day EMA. So if you see a buy, that means that it has a silver cross or the 20-day EMA above its 50-day EMA. Very simply, the long-term trend model is 50 200-day EMA crossovers. So 50 below the 200 on both financials and on energy currently. All right, let's go look at some charts and see what has been going on in this market. It was a crazy day for sure. When I opened this morning, we were still just in negative territory when I did the Decision Point Trading Room this morning, but certainly things have really moved further south. Since that particular time. At this point, I've got this as very, very short-term support, which was broken. Next up will probably be this level here at 3,400. That's what we'd be looking for. And then past that, the low back here from earlier in October, on October 6th, that would be my next areas to watch. Definitely not a pretty picture on the 10-minute bar chart. I can definitely say that. But let's look at that 5-month candlestick. Bring that back up here. There we go. Here's that 5-month candlestick. Did you want to give any information that you're seeing right off the bat, Dad?
I noticed that volume was low, so it's not, it doesn't mean that the decline is going to continue, but it's certainly not climactic. It's not blowout volume at all by any means.
Mm-hmm.
So I think we should expect more based on that.
Yes, yes. A couple of things to note. The RSI, it's still positive, guys, but it has been headed definitely into negative territory at this point. Like I said, it's still just barely positive. This is something that worries me, I have to say, is to see that PMO turning over right now. I don't think that's a good sign at all. On the good news front, if you will, this is the VIX on an inverted scale. And you can see that that lower Bollinger Band has been punctured. Typically in the very short term, when you get those Bollinger Band punctures to the downside, again on the inverted scale, you're usually going to see you'll usually see a day or two of a rally following that, usually. Right now, those bands are so squeezed tightly, they're squeezed very tightly. And so it's a little bit easier for it to puncture the upper and lower bands. But we haven't seen that puncture of a lower band since earlier this month. So we'll have to keep an eye on that. But that's a positive, but looking at everything else here, not so positive.
Well, it's oversold when it hits the band. That's a one measure of being oversold. But as you notice in August, when it hit the band there in the last week of August, the market went into a decline.
Yep.
So it's oversold, but it doesn't, still be careful.
Absolutely. Absolutely. Let's look at that 1-year daily chart real quick, and then I'm going to pass it over to you, and to look at our short-term indicators. Here's a better look at that PMO now that we're on a 1-year chart. You can see that turning over a little bit more clearly. You can see the rising trend channel is broken. 20-day EMA, we did at least close above it, but it's looking a little soft, and that decline at the end of the day doesn't feel so good, I have to say. Look at these, if they're up to date. Yes, they are. So this is the Swenlin trading oscillators, and we've now entered negative territory. They have been in decline for some time. They really warned us, I think, at this top that problems were brewing, and since then it has been rather rocky on the way down. They're not what I would call oversold at all. I think that they could still expand lower. And, I don't see a whole lot of support out there to keep the rally or bring this rally back up, just because I don't like the look of how many, we only have about 2/3 with rising momentum. We really need to have a better shot at that momentum. You want to see those prices moving higher on the components, and we're just not seeing that right now. All right, I'm going to pass it back to you, and let's have a little bit of a history lesson.
Okay. Any of you who have followed me for any length of time would have seen this chart before, but I always like to bring it out once in a while, because there's a lot of things to be learned from it. But today's the 33rd anniversary of the crash, that being the decline from this close here to this close. That was the 1-day drop right there. 20% on the S&P, 22% on the Dow. But notice there was a bear market. It went it was 36% decline from the all-time high of that year, and not a fun time. did we, one of the things that I like to point out is that when we see chart patterns, and we could say, okay, well, this chart pattern is looking just like this chart pattern, and it is. I mean, they're almost identical.
They really are.
Came out of it. It came out of it, right? So we'd be looking for another leg up out of that low, but except it closed down below that support area there, and by this time, people should have been ducking, heading for cover.
Mm-hmm.
We got about a 2-day notice with the 20 crossing the 50, and there was not a lot of time to move, but there was some warning. And as far as what I was doing at that time, well, I had been involved in my studies since about 1981, and everything was done manually on accounting paper and graph paper, and I finally I had a regular job, and I just couldn't keep up with all the manual posting, and I quit early in 1987, so I was cleverly out of the market when it crashed there. Okay.
Yeah.
What are we looking at now?
I think you have.
Yes, I've got my list here. Okay.
Yes.
Okay, I saw a comment came from strayreflections.com. Jawad Mian is the name of the person that wrote it, but it was a very pithy little sentence that I thought something we should put on a sign and hanging on the wall where we can see it during the day trading. But it says, our job is not to see the future, it is to see the present very clearly. And that is, it is so true. I mean, technical analysis does not tell the future, but it does give you hints. It does give you hints of what might happen. So, but sometimes we can get sucked into it thinking we have a crystal ball, and we don't. And what I was wanting to show, that's not the one. Here we go. IBM. Seeing the present very clearly. I don't see how anybody can operate without using charts. I just don't. When I saw one of the financial shows, a guy was saying that IBM was one his firm was looking at or recommending because it had a yield of 5%, and that caught my attention.
Mm-hmm.
IBM, of course, used to be Big Blue, and now it's old tech, and it doesn't really follow all the other technology companies. And I'm not a fundamental analyst. I couldn't really break it down as to what the problem might be, except it's just old tech, or it's an old favorite that's out of favor. But this chart, we can see the bear market move here, but mainly it's just in this narrow range, and that I wonder what it looks like on a longer term. When we're talking about a 5% yield, when we're saying investing in something for the yield, we want to have some clues that maybe it's going to go higher, or that it's not going to go lower, because your principal when you're in a stock is a great risk and to losing it. So as opposed to other types of investments where the yield is the key target for investing. But here, and again, we got this really wide range, and it's going from what? Let's get that in spec.
That is huge.
Yeah. Okay, from there to there is 43%. And from there, there is 73%. So 75, whatever. Not, and you know, considering where it's going higher, that's good. But again, where is this in the really long term? What does it look like there? And then what we've got here is I would say, a high level consolidation, but it's a really wide range. So my picking this stock to talk about is not a recommendation whatsoever, but you know, it certainly is a good stock in terms of its yield. But again, if it gets hit various ways, the yield, they could cut the dividend, so the yield would go down. Mm-hmm. So it's not like the stock could go down and you can continue collecting 5%. That it may not work out that way.
Right. And, you know, it's funny, this was requested in the trading room this morning. And so I was looking at that daily chart, and, you know, my one of the things I was talking about were these trading ranges. And, you know, for me, if I'm going to get into a stock, I want one that has more upside potential. I don't want to be stuck in a stock that goes mostly sideways for a while, where I really have to count on a dividend, or, you know, I want to get in maybe at the lower end of that trading range, but it's too much work.
Once possible, strategy would be to wait till it gets down to the low end of this range. Doesn't mean that's where it's going to stop, but you get down in here, and now maybe the dividend is at 7%, so which is even more attractive. But then, so it might make it more palatable if you watch it sink down to here. It just, I don't find myself too entranced with long-term investing in this market. It's just way too overvalued. Okay, and I've got one more chart that I wanted to show here. Wanted to talk about the Golden Cross, Silver Cross, and while we're at it, the bullish percent index. But the Silver Cross index is a percent of stocks that have the 20 EMA is above the 50 EMA. So at here, we were up around a little above 80, and you notice how it dropped off before the big crash. It's way lower than what we had here, this was getting up close to 90%. I think it was above 90. And so this is not so encouraging. You know, we have almost a new high, but it's much lower than it was just a little while ago. And I want you to notice that I have these vertical dotted lines, and I put them in what I call cardinal tops, and important tops. But the idea is to show divergences like this. We had negative divergences on all three of those as it was hitting that top there, right there, in the market. Now, again, between these two tops, we've got a negative divergence. And I didn't extend this dotted line over to here because from between here and here, we've got an indicator that is confirming. You know, we've got a top beneath the top on that, top beneath the top. And that's just confirming. When a confirming indicator, as I have emphasized many times, doesn't really tell you anything. It doesn't tell you, the only thing it says is it's in year, but that doesn't tell you what it's going to do next. The divergences hint at what it might do next. But when you have a confirmation move, it's just, it can make confirm, but it can turn, you know, on its head the next day.
What do you think of the Golden Cross?
Yeah, that is really pretty astounding to me, because we've had a good, how many months, 8 months or so, uh, between, this was above 80%, and now we're at 65%. So long-term wise, we have a much lower percentage of stocks that are below, that have a gold, a death cross. Their 50 EMA is below their 200 EMA. And it's, now we do have improvement from this top to here, but it takes a little while for this thing to turn.
Yeah, when you see how long it took and how straight up almost we came out of that bear market low, it is somewhat surprising. You know, the silver cross kind of caught up and got into that really overbought territory, but the golden cross never really, you know, is challenged that top despite this bear market drive.
Right. Yeah, it's had plenty of time. It's had plenty of time to get back up there.
Exactly, and it hasn't.
Right.
Not good. Okay.
Okay, I guess it's back to you.
Yeah, my turn. Okay. Well, of course, always feel free to hop in there. I thought I'd just take a quick peek at the sector summary for the day and then also for the week. So as you can see, utilities, materials, the leaders as far as today in terms of not going down as far. Energy has just been a loser. Like I said, there's only one bright spot in there, and that would be renewable energy, which I think I'm going to talk about next. Technology, you know, obviously failing today too. These are areas, the technology and communication services sectors are two that I've been watching closely. We've really seen a lot of strength in there. And comm services, I was really starting to see some nice diamonds in there to pick from. But interesting to see them being the laggards. As far as the week goes, though, here we are. So 1 week, everything is still down. Energy near the bottom, of course, real estate, two very, this is a defensive sector, but again, technology and comm services are just not performing. Of course, they're down quite a bit, got very extended. So, it's not, so far, not a great week for these sectors, but like I was saying, there is one bright spot in energy, and that would be the renewable energy area. You can see over the past week the difference, but look at what's happened over 3 months. Look at the change here. 40% gain in 3 months for renewable energy. This is really the only thing holding up that particular sector right now. Lots of people want to look at renewable energy. Let me get to the chart. All right, so this is the industrial, the Dow Jones US. This is just the industry group chart. You can't buy this chart. But you can see that we've continued on this move. We had a bit of consolidation. This, I'm not really thrilled to see that big wick to the top here, closing near the bottom. But ultimately, you can see it's just been a really strong sector. TAN is an ETF within there. And I think I might have even talked about renewable energy last week a little bit. But you can see that the solar ETF, we're getting what looks like a really nice flag. So despite the market pulling back, we're not seeing too much damage here on the ETF. Although look, it is quite overbought, but it's managed to stay that way for quite a while without losing too much. The one I want to point out though is Sunrun. And I point it out because this is the only one I've noticed that really had a pullback. And so to me, if this is a sector you're interested in and feel like you may have missed the boat, I think that Sunrun might have the opportunity you're looking for with this pullback from, let's see, how big a pullback? 20%, I think? 27% from that top to where we're trading now, 25% drop. So that's a nice pullback. The RSI is still negative here, and the PMO is still heading the wrong direction. But I think if you're interested in that renewable energy sector, Sunrun might be the one to keep an eye on. We're at $60. That could provide very excellent support. We're at the 50-day EMA. That's where it found its support last time. So I thought that that's a really interesting chart that I did want to share. And but I do have to give you full disclosure. I'm not trying to sell you Sunrun, but I do happen to own it. So I've gotten to enjoy a lot of that pullback, but that's okay. It's I've got a couple others in the.
Those renewable companies, they should be in a separate industry group.
They really should, and I know Dave Kaller was talking about that as well. But so far, at this point at least, we don't have it listed in StockCharts separately. But yeah, really interesting setups. And SunPower is the other one. And again, full disclosure, I own this. But you can see a big difference. There's that flag that you saw on tan. Now we've got that pop out of it. Of course, again, I don't like these big intraday moves and then a close near the bottom, but very different looking chart than Sunrun. So there are different ones out there. Those are the ones that I've been paying attention to, mainly because I own them, but also just because those are some of the big players, I think, in that space. So something to look at. But let's do our diamond of the week. And that is Stitch Fix. And this one I gave to my diamond subscribers on Thursday. I really liked the way this chart had been setting up. In fact, I could probably pull up the one that I had for it. There we go. All right, 3 minutes here for us. All right, so this is what the chart looked like when I got to it. It had come up, it had broken out, and it had pulled back. You can see where the top of that pink line is there. That is where it had closed when I picked it on Thursday. You can see right in there. What was going good? We had a positive RSI. We had the PMO buy signal. It's still headed up, not overbought. You can see that we were getting volume coming in with the breakout. Granted, not the biggest breakout when we came past this level in price. I usually like to see a bit more volume come in, but ultimately it's still doing what it needs to. And you've got that lovely scooter sitting at 94. So really like the look of Stitch Fix, and looking at it on the weekly chart, we are getting ready to hit some overhead resistance here. Up there, you can see where it tested it, but really this is the level right here. And we just got above it. We're trading above it right now this week. So I like Stitch Fix. I think that Stitch Fix might continue on and continue to be a diamond. And it is this week's diamond of the week. So recommend you go check us out online, DecisionPoint.com. Go ahead and sign up for our free email list if you have not already. That's how you can get in touch with me for the trading rooms. And then, of course, we've got our subscriptions available, and here are the blogs and links that we have. So these are where you're going to get your diamond reports and your DP alert reports. We keep you up to date every single day in the DP alert. And diamonds are 3 times a week with a recap on Friday. So we cover quite a bit on our products here at Decision Point, our subscriptions. We have quite a few happy subscribers. We hope that you will come and join us as well on our website. That would be great. And you know, even if you are not paying for us, you can still get a login to go to all of our free links here. We have the show archives. The workshop links are really the one that I think you should check out if you are somewhat new to Decision Point and even trading. I have tons of these on YouTube. So go ahead and check all of those out. But that's all we got, Dad. It's time to close it down.
See you next week.
Yes, absolutely. So everybody have a great trading week. Hopefully we'll start seeing some positive numbers coming in. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.